In this video, we're covering RateX, a new type of DeFi protocol that lets you boost your yield, lock in fixed income, and even trade interest rates, all using your favorite yield-bearing assets. If you've ever wanted to take the boring world of passive staking and turn it into something more dynamic, RateX may be for you. Welcome back to the DeFi 101 course. This course is made with support from the Solana Foundation and is designed to take you from a crypto investor to a crypto user. You can find a link to the full course playlist as well as supplementary written materials in the description. Now let's get into it. RateX is the first leveraged yield exchange. It lets you separate the yield from the principal of assets like JITO-SOL, MSOL, and others. This lets you do three things. Earn fixed yield by selling your future yield up front. Second, trade yield, long or short, using leverage. Third, provide liquidity and earn fees plus yield. This system is powered by two key token types, ST or standard tokens, representing the base asset, like one SOL, and YT or yield tokens, which represent the future yield generated by that asset until a specific date. Let's break it down with an example. If you hold one JITO-SOL, you are earning staking rewards over time on SOL. But on RateX, you can split that JITO-SOL into a principal token, or a PT, which is the value which you would get back at maturity, and a yield token, or YT, which entitles the holder to all the yield from now until the expiration date. This opens up a whole world of yield strategies. Let's say you're holding JITO-SOL and you want to lock in a fixed return. On RateX, you can sell the yield token and keep just the principal token. This means you get a lump sum upfront in exchange for your future yield, and at maturity, you get the original asset back. It's simple, there's zero volatility, and you receive a known APY. If the market says the YT is worth 0.015 SOL and you sell it now, you're effectively locking in a 6% yield for that period. Here's where it gets interesting. YT prices move based on implied yield expectations, kind of like how interest rates move bond prices. If you think yield is going to rise, you can long the YT, and if you think yield is going to fall, you can short the YT. Let's walk through a long trade. You deposit one SOL as margin and use 10x leverage to buy 100 YT at 0.1 SOL each. If the implied yield rises, the value of those YT increases and you profit. Just like trading prices, you're trading yield curves. And with leverage, the potential returns are amplified along with the risk. If you want to be the house, RateX also lets you provide liquidity to YT-ST pairs. As liquidity provider, you earn yield from the underlying asset, in other words, the staking rewards, and also a share of trading fees. And you earn profit from being the counterparty to YT traders. You're essentially depositing a yield-bearing asset and minting both ST and YT, which are used to form an automated market maker for traders to swap in and out of. Here's a bonus. Since YT values decay over time, impermanent loss actually decreases as contracts approach maturity. So what are the risks? This isn't your basic staking, so you need to understand all the risk involved. For traders, there's liquidation risk if your margin ratio falls below the threshold. And since YT prices decay, you're also exposed to time decay if you hold too long without yield moving. For fixed yield users, you're giving up variable yield in exchange for certainty, which can underperform in bull markets, or sometimes, for example, if there's an airdrop that outperforms. For LPs, you need to manage your YT obligation. In rare cases, if yield spikes or liquidations overwhelm the system, LPs might take on socialized losses. RateX has mechanisms like price cages, TWAP oracles, and collateral ratio buffers to manage this. But this is still advanced DeFi. Use small size, monitor your positions, and know the risk. I'd also recommend starting small to understand the system before you go all in. RateX is a creative way to earn money in DeFi, and the yield market should continue to grow over time. If you're deep in DeFi, it gives you a ton of options to lock in fixed income, trade yield like a market, and provide liquidity or earn from others doing both. Just remember, yield trading is still new, and leverage magnifies both gains and losses. For more breakdowns like this, plus tools to navigate DeFi smarter, check out our newsletter at newsletter.dynamodefi.com and look at the rest of this DeFi 101 course for more tutorials. Until next time, this is Dynamo DeFi.